The current situation in the global precious metals market is very interesting, especially regarding silver. While central banks are known for being heavy buyers of gold, silver often gets overlooked. This is not due to a lack of value, but rather because central banks are not required by IMF regulations to hold silver as reserves. That could change in the near future as silver starts to re-emerge as a key monetary metal. Already, at least 3 national banks have begun buying silver, signaling the start of what could be a larger trend in the coming years. The reasons behind this renewed interest are multi-layered. Firstly, silver remains affordable compared to gold, making it an attractive option for central banks looking to diversify reserves. Unlike gold, silver has a higher industrial demand, being crucial for electronics, solar panels, and emerging technologies such as EV batteries. Central banks may see this dual role of silver as both a store of value and an industrial metal as a strategic advantage. If they decide to increase their silver holdings, it could trigger a significant upward movement in the price of silver. Some countries, including Russia, India, and nations in the Arabian Peninsula, have reportedly been purchasing silver, although details are often vague. The method of acquisition varies. Some invest directly in physical silver, while others may buy through ETFs like SLV. However, these ETFs are complicated instruments. The legal filings and prospectuses are often written in dense language, making it difficult for regular investors to understand. Reading them carefully, you can see that every clause has multiple implications, and some even feel like they are designed to mislead or confuse. From my perspective, these governments would be better off buying 1,000-ounce silver bars directly, rather than relying on ETFs that may not fully reflect physical silver ownership. The broader implication is that we are witnessing the early stages of silver's resurgence as a recognized monetary metal. Historically, silver has played a key role in the financial system, but over the past century, it has been overshadowed by gold. As economic pressures continue, rising debts, currency fluctuations, and geopolitical instability, central banks may begin to reconsider their reserve policies. If confidence in fiat currencies continues to erode, both gold and silver could see significant demand as stores of wealth. Investor awareness is also growing. While central banks are only starting to take silver seriously, the general market has already begun pricing in its potential. This creates a unique window for savvy investors to position themselves in physical silver or trusted ETFs before the market fully reacts. Supply constraints, combined with rising industrial and monetary demand, make silver one of the most undervalued assets in today's market. Finally, the global nature of silver interest cannot be overlooked. People from countries like Poland, watching these developments, understand that silver is not just a local or regional commodity. It's a globally recognized asset with strategic importance. As more central banks and investors take notice, the long-term trend points to silver reclaiming its historical status as a monetary metal and industrial powerhouse. Silver's potential as both a monetary metal and an industrial commodity is becoming increasingly apparent. While gold remains the anchor of global reserves, silver is quietly preparing for a major comeback. The early moves by central banks show that they are starting to reassess silver's strategic value. This is important because historically, once central banks begin accumulating a metal, it often triggers a broader market shift. In the coming years, we could see a significant increase in demand for physical silver, which will directly impact its price. Currently, some of the world's leading banks are experimenting with silver purchases, but it's still only a small fraction of their overall reserves. This creates a unique opportunity for investors who understand the fundamentals. The fact that silver is undervalued compared to gold, and that it has a dual role in both finance and industry, makes it a rare asset with high upside potential. Silver's scarcity in relation to rising demand adds a structural element to its bull case. Unlike gold, silver is heavily used in industries such as electronics, solar energy, and emerging technologies like electric vehicles. These industrial needs are projected to grow exponentially over the next decade. The mechanics of investing in silver, however, require careful consideration. ETFs like SLV are commonly used for exposure, but they come with legal and operational complexities. Many documents associated with these ETFs are dense, with multiple interpretations possible. For this reason, serious investors often prefer physical silver, which guarantees ownership of the actual metal. 1,000-ounce bars, or smaller physical coins, remain a more reliable way to secure assets, especially when the market is experiencing structural changes like we are seeing today. Industrial demand is not the only driver. Geopolitical instability, currency devaluation, and rising global debt are creating a scenario where tangible assets are regaining importance. Investors and governments alike are seeking protection against fiat currency risks, and silver fits this role perfectly. Unlike paper assets, physical silver cannot be arbitrarily printed, making it an effective hedge against inflation and financial uncertainty. Another critical factor is the historical undervaluation of silver relative to gold. The gold-to-silver ratio has often been used to assess market opportunities. Currently, this ratio suggests that silver is significantly undervalued, which indicates potential for substantial gains when the market corrects. Investors who understand this relationship can strategically position themselves to benefit when silver's price adjusts closer to historical norms. Finally, the global awareness of silver's potential is growing. From investors in the United States to enthusiasts in Europe and Asia, people are beginning to understand that silver is not just a secondary asset. It has unique advantages that differentiate it from gold. As central banks increase their participation and industrial applications expand, silver is set to reclaim its role as a key monetary and industrial metal, potentially offering significant returns for those prepared to act now. Silver's trajectory is increasingly tied to both market fundamentals and emerging technologies. One of the most significant drivers of future demand is the rise of electric vehicles, EVs, and renewable energy systems. Silver is a critical component in batteries, solar panels, and other energy-efficient technologies. While current silver use in EVs is minimal, projections suggest that the adoption of solid-state batteries and other innovations could dramatically increase silver consumption. Early pilot programs from companies like Samsung indicate that silver's role in high-capacity batteries could become substantial, especially in luxury EVs initially, and eventually across mass-market vehicles as production scales. The implications for supply are profound. Global silver production is limited, and a sudden increase in industrial demand could exacerbate existing shortages. For example, if EV manufacturers require even 1 kilogram of silver per battery pack, the cumulative demand across millions of vehicles could consume a significant portion of annual silver output. This scenario demonstrates how technological adoption can act as a catalyst for silver price appreciation, particularly when combined with central bank purchases and investor interest. Beyond industry, silver's status as a monetary metal is being reconsidered. Historically, silver held a key role in reserves and trade, but over the past century, it has been overshadowed by gold. The early purchases by national banks suggest a potential shift in policy, recognizing silver as a reliable store of value. If central banks begin to hold significant silver reserves, it could trigger a chain reaction in the markets, similar to what occurs when governments increase gold holdings. Investors who anticipate these changes are likely to see substantial gains as supply remains constrained and demand increases. The global market dynamics are also worth noting. Countries like Russia, India, and other Middle Eastern nations have shown interest in silver, indicating that the resurgence is not localized, but worldwide. This international demand reinforces the long-term bullish case, as physical silver becomes a sought-after asset across multiple regions. Investors in Europe, Asia, and the Americas are starting to recognize that silver is not merely a speculative metal, but a strategic asset with dual roles in industry and finance. Another element reinforcing silver's potential is the gold-to-silver ratio, which highlights historical undervaluation. Currently, silver trades far below the levels implied by historical norms when compared to gold. Analysts, including Mike Maloney, argue that when this ratio corrects, silver could reach triple-digit prices and potentially surpass $200 per ounce within the next market cycle. This underscores the idea that silver's value is fundamentally supported, not just by speculation, but by systemic factors including supply constraints, industrial demand, and monetary recognition. Finally, investors should focus on physical silver as the primary method of securing exposure. ETFs and paper assets can be useful, but they carry additional risks and do not guarantee physical ownership. By holding coins or bars, investors ensure that they are truly participating in the market and are protected against institutional or systemic risks that could affect paper markets. The combination of central bank demand, industrial growth, and undervaluation positions silver as one of the most compelling investment opportunities available today. As silver continues its ascent, the combination of supply constraints and growing demand from multiple sectors is creating a perfect storm for price appreciation. While gold has historically dominated as the safe haven metal, silver is now emerging as the real disruptor, attracting attention from both investors and central banks. The increasing institutional focus on precious metals reflects a broader recognition that fiat currencies are losing reliability, and tangible assets are becoming essential for portfolio security. One critical driver is the shifting allocation strategies among institutional investors. Traditional 60-40 portfolios, heavily weighted in stocks and bonds, are being reconsidered. Reports indicate that some large firms are exploring a 60-20-20 model, where 20% of the portfolio is allocated to gold and silver. This shift demonstrates growing confidence in precious metals, not only as hedges, but as core holdings capable of preserving wealth during periods of financial uncertainty. As this trend grows, the demand for physical silver could accelerate, placing additional upward pressure on prices. Geopolitical tensions are another significant factor influencing silver's trajectory. Events in Venezuela, China, Russia, and other regions have disrupted markets and created heightened uncertainty, which naturally drives investors towards safe haven assets like silver and gold. Physical metals provide a level of protection against both economic and geopolitical instability, making them increasingly attractive to global investors. Furthermore, these tensions can impact the supply of silver, particularly from regions with significant mining operations, further tightening the market. The industrial demand side continues to expand as well. Solar energy, electrification, and advanced electronics all rely on silver, and innovations in these areas are only increasing consumption. The introduction of solid-state batteries, high-efficiency solar cells, and other emerging technologies will require silver in quantities previously unseen. Analysts project that even partial adoption of these technologies could consume hundreds of millions of ounces of silver annually, representing a substantial portion of global production. This creates a structural imbalance that supports sustained price growth. Additionally, silver's historical undervaluation relative to gold remains a compelling reason for its long-term appreciation. The gold-to-silver ratio is still far from historical norms, signaling that silver has significant upside potential. Market participants who recognize this disparity are likely to position themselves early, increasing both institutional and retail interest. When this recognition becomes widespread, we could witness a sharp and sustained rally, similar to historical bull markets for precious metals. Finally, physical ownership remains paramount. Paper markets and ETFs provide convenience but carry risks that can obscure actual market dynamics. Holding physical silver ensures true possession, offering security in volatile markets where institutional or systemic risks may affect paper assets. The combination of undervaluation, industrial growth, central bank interest, and geopolitical uncertainty makes silver an exceptionally strategic investment for those prepared to act decisively. Silver is no longer the secondary cousin to gold. It is stepping into its own spotlight, with structural factors supporting a prolonged and significant upward trend. Investors who understand these dynamics and act now could find themselves well positioned for the coming surge in silver's value. Silver's outlook has never been more compelling. Between supply constraints, surging industrial demand, central bank interest, and undervaluation relative to gold, the factors aligning for a major rally are unmistakable. Investors who act now, focusing on physical silver, are positioning themselves for both wealth preservation and potential significant gains. The combination of technological adoption, especially in EV batteries and renewable energy, and global macroeconomic uncertainty, ensures silver's role as a critical asset in the coming years. Looking at the gold-silver ratio, historical trends, and the ongoing recognition of silver as a monetary and industrial metal, it's clear that this is more than a temporary spike. The market is signaling that silver is moving toward long-term structural growth, and those who understand its fundamentals have a unique opportunity. This isn't just speculation. It's grounded in supply-demand dynamics, technological innovations, and strategic positioning by both nations and savvy investors. For those watching the markets closely, the takeaway is simple. Don't underestimate silver. Its potential to outperform, both in terms of returns and as a hedge against economic instability, is significant. While gold remains a stalwart, silver is emerging as the disruptor with real momentum behind it. Investors should be mindful of their allocation, consider physical ownership, and stay alert to developments in central bank policies and industrial adoption. Thank you for joining me on this detailed analysis. If you found this video valuable, make sure to hit the subscribe button for daily updates and insights on precious metals. Press the bell icon so you don't miss any alerts. Share this video with fellow investors who want to understand the silver market from an analytical perspective. Also, I'd love to hear your thoughts. What's your prediction for silver prices in the next year? Do you see it breaking historic highs, or do you think the market will stabilize? Leave your comments below and let's discuss. Your engagement helps us provide better content tailored to what you need as investors. Lastly, don't forget about our ongoing silver giveaway. Subscribing and participating gives you a chance to receive silver delivered straight to your door, an excellent way to start or expand your physical holdings. Good luck to all participants, and thank you for being part of the Gold Rush Reporter community. Stay informed, stay strategic, and always consider the fundamentals when investing in precious metals. Silver is rising and the opportunity is here. Be prepared to act wisely. Until next time, this is your silver analyst at Gold Rush Reporter signing off. Stay sharp, stay invested, and I'll see you in the next video.